I've been generally nervous about EPFO, and with these new rulings coming in,
the process to get it out is so tedious that probably a lot of it would just be written off. Partial withdrawal has a high success rate. There is very less documentation that is required. A lot of people don't know that you can also withdraw on behalf of your family. So if you have a marriage in your family, right, whether it's your children, whether it's your sibling, even then you can utilize this money in the same reasoning, right? For higher education, at your wife's education or your children's higher education, you can withdraw.
if you are still employed and say you have the need of a personal loan for an emergency, how hard or easy is it to take out that money?
It's super simple.
Imagine somebody who's a viewer has like a 40-50% of their life savings in EPFO.
They can at max withdraw up to 75% of their portfolio.
I have a home loan running. Would you recommend that we take out the money from our EPFO and pay our home loan?
This channel is brought to you by the 01 Media Network by Zerodha. With their support, I'll be helping you spend your money wisely.
Okay, you were telling me about your background.
I am a typical computer science engineer who got his engineering from Bangalore and got his first job in Bangalore. Worked for almost 12 years. A lot of it, towards the end of it, was on the fintech side of things, on the finance side of things. So I come from a Marwadi Gujarati background, so inherently very interested on the finance side of things.
Yeah.
Towards the end of my career was also advising friends and family on how to invest, where to invest, and got my mutual fund distributor license. During this phase is where I met with a personal tragedy, lost a friend, and then saw his family struggle. It took them almost 4 years to figure out where his money was, get a lot of it out. Some of it is still lost. But that gave, a realization that if tomorrow something happens to me, my family would also be in the same situation.
Yeah.
And it's not just me. The problem is very common, right? We have nuclear families. All our investments happen through our phone.
Yeah.
Right? It literally takes 10 minutes to download an app, do eKYC, UPI, and your money is in.
Yeah.
But A, family doesn't know where it is. B, even if you, maintain an Excel sheet, you maintain an email, and you ensure that they will get it. The process to get it out is so tedious that probably a lot of it would just be written off. They would just say it's more time consuming and effort consuming than the actual amount that is left there.
Yeah.
Right. So that's what I wanted to solve for. And that's where 2 years back I quit my job, started Kustodian.life full time. The idea was to A, how can we prevent this, and B, when it has already happened, what can we do?
So Kunal, I have a question where I need your help. I have a home loan running. I also have the home is in my name and my wife's name, and the home loan is also in both our names. My wife is also an employee, has an EPF corpus and a PPF corpus, and same with me. I have an EPF and a PPF as well. Would you recommend that we take out, the house was bought up about 2-3 years ago. So two things. One, would you recommend that we take out the money from our EPFO and pay our home loan? And how should we think about it? And two, if yes, what are the conditions? What are the limits, sub-limits, all of that stuff? And so if you can shed some light on that.
Let me ask another question related to that, right? The first one being, what's the home loan interest that you have right now?
So the home loan interest is lower than the EPFO interest. I think about a 1 percentage point lower than the EPFO interest. So financially, it probably doesn't make sense to remove the home loan.
Okay. So that's one angle, because a lot of people don't have that luxury where their home loan interest or any loan that they want to clear has a better interest rate than this, right? The second angle is, as part of your portfolio, right?
Yeah.
Because EPFO is more like a debt instrument, right? So as part of your net assets, right, either your individual or yours as a family, right, what percentage of amount do you have in EPFO?
So I think as a family unit, about 10% would be in EPFO and another 10-15% in other debt instruments like a PPF, arbitrage fund, liquid funds, and all of that stuff.
Right. Understood. So, I'm not a registered investment advisor, so I can't advise you on how to do those investments. Yeah. But if I were you, right, I would think it this way, right? A, I have a 1% gain every year, right? B, when it comes to debt instruments, right, I am anyway, certain part of my portfolio, I would like to keep it in debt instruments.
Yeah.
And at this stage, of course, not a lot. At this stage, probably a lot more on other asset sizes, but at least 15 to 20% is something that I would like to keep in my debt portfolio for the instrument. And EPFO is one such instrument where you have triple tax benefits. You you save tax on, while contributing, you save tax while it earns, and you save tax while you want to withdraw, right? So it has the triple tax exemption. So considering the amount that you have in terms of percentage of your portfolio and the 1% gain that you are anyway additionally making on top of your loan, I would not take it out and put it especially to clear my home loan, because my home loan I'm also saving on taxes. So that's another added advantage apart from that 1% that you are already gaining. Plus anyway, if you think from a portfolio perspective, having less than, if you take this out, right, you would end up with less than 10% in debt portfolio, which I think is very high risky in current volatile markets. In fact, in any volatile market, less than 10% debt portfolio is high risk.
No, fair. So I think that's a fair ask. But now okay, I won't remove it. I hear you. But imagine somebody who's a viewer has like a 40-50% of their life savings in EPFO, and they should remove it because their home loan is more expensive and so on, and they want to remove it. What is the threshold? How much can they remove? What is the step to do it? Can you walk us through that?
Right. So now with the new regulations coming in, they can at max withdraw up to 75% of their portfolio, which means they need to go back and look into how much is their EPF wage, right? Because that into 36 times it comes. So usually what happens is it doesn't check your EPF wage of your previous employment or your first employment. It is your current type. So whatever you got last month paid, EPF wage is around that. And in most cases,
What is EPF wage? EPF wage is like basic wage?
What happens is your basic wage as per your payslip, right? So ideal scenario of basic wage as per your payslip should be same as what has been reflective in EPFO, right? But a lot of employers, in order to reduce the contribution that you would be giving to EPFO, they make that salary adjustments so that you pay a minimum amount to the EPFO. Right? If you open your passbook, you will be able to see a column that's called EPF wage, right? Based on whose calculation this everything works, not on your actual salary or what you're getting in hand. That's irrelevant.
Okay.
So using that formula, because if you have worked 8 to 10 years, right, it is assumed that your last EPF wage would be decently high compared to the net portfolio that you have gained or the total value of the money that you have in EPFO. But so most cases you should be able to take out to 75%, which is the new regulation limit, as a withdrawal for your home loan. In cases where your current employer has shown EPF wage is very low, right, then it would be a challenge and you'd be able to take out based on the formula 36 times into your last EPF wage. That's the highest number that you should be able to take.
So 36 times is what you can take out of your EPFO wage, and depending on whichever is higher or lower, the lower amount is what you can take off. Second question is there a time limit also? That say, for example, I took my loan say 5 years ago. Can I take it out at any time during the loan, or is there a window that X years after you bought the house, only then can you take it out, or something like that?
So earlier there were limitations, right? There were limitations around each category, whether you are taking for buying a home or getting a home loan. There were time constraints around that. Now, as per the new regulation, right, all those constraints have been removed. The idea is the only time constraint that is there, which is you should have at least 12 months of service period or 10-year period as per the EPFO. If you have that, then you are eligible to take out. Whether your home loan has just started or even you want to purchase a home, even that you can utilize this balance or withdrawal reason.
Got it. Okay, so that's home loan. Any other reasons that you do this every day, right? Like any other reasons or any other instances where it makes sense to take out EPFO, and would you recommend that people keep taking it out at regular intervals, or do you recommend that they should just let it be there and let it grow?
See, one primary reason where I would recommend people to take it is education loans, because they home loans comparatively the percentage is minimal, right? The interest rate is much lesser. Education loans, the interest rate is high, and that is something when you are going for higher education, you don't have a side income as well. There is a lot of financial pressure itself. So education is something that I would definitely recommend a lot of people to consider taking wealth from their EPFO accounts.
And what is the limit on education? Similar to a home loan where it was 36 months, what is the limit here?
I'll have to check the exact slab, but considering in most cases you should be able to take out or reach the 75% slab of your wealth. And what usually happens is, the documentation in this withdrawal, what practically happens, right? The documentation required in this withdrawals are very minimal, right? So I have personally seen people misusing them. That's another drawback, that even you don't have an occasion, you're not going for a higher education, people put multiple requests, right? One for higher education, one for medical, this thing. So that's one misuse that people often do. And whatever is the higher limit, they go up till that and they are able to withdraw that. So that's one thing that works in both the sides of the cases, right? Apart from education, I think any requirement that you have where you need to go for a personal loan, personal loans are also super expensive. Right. So if there is a medical emergency at home, or if there is a cash crunch because of XYZ reason, instead of borrowing at 11-12% from lenders, that's if you have a good credit score. If you have bad, then it could go, 15, 18, 20% as well, depending on how you are borrowing. Your 8.25% losing on that is much better.
Question though, if you are still employed and say you have the need of a personal loan for an emergency, is it easy to get that money? Because from what I heard you say earlier is that, they have these, like they almost want you to be unemployed for them to release this money, and it makes it easier. But if you're employed and you have an emergency, from your experience, how hard or easy is it to take out that money?
It's super simple if you want to do a partial withdrawal.
Okay.
So partial withdrawals are easy. One of the reasons why full withdrawals are big challenges, they won't have even any checks, right? So partial withdrawal is mostly automated. Even before this new rules and regulations came in, right, they had a very high success rate because the checks that they have, right, whether you have contribution issue, whether you have a name mismatch issues, all those issues weren't even being checked. So partial withdrawal were already easy, and with this new regulation, they have said that we'll make it further easier. It's the problem comes is the full and final settlement. Now imagine earlier the situation was 2 months later after your last job, you realize that you did a full withdrawal, it got rejected, and you realize that there is some problem, right? You go to your ex-employer, ask them to fix it. Now that time period would increase to minimum of 12 months. So if there is some mess that has happened, right, you won't even know about it until 12 months later. Imagine going back to your ex-employers, asking them to support, you as an ex-employee 1 year after quitting that job. Becomes very unlikely.
Yeah.
And on top of that, you might be in different places, right? As per life, you might be out of country, you might be in a different situation, right? Because this is not immediate. Like after 12 months, you might be doing something else, right? You might be in mountains enjoying your life, but you need to come back to get this money. So that becomes very problematic when it comes to full and final settlements.
So Kunal, we covered what are some of the bad changes, or rather the negative changes that have come about. Are there any positive changes also that the government has done in this new ruling?
Yes, even the changes that we discussed, right, the challenging things which I personally am not comfortable, the intent behind them is great. Government wants people to have higher retirement funds, right? But probably execution could have been much better. Coming to the good points, I think what they've done with partial withdrawals, right? Some of these pointers are great, right? Earlier there were 13 different regulations under which you can do a partial withdrawal. Now they have limited it to 3, right? So there's very less confusing in why you want it, right? They just added a miscellaneous category. So you don't have to explain yourself why you need the money, because anyway, a lot of people were, giving false reasons or giving random reasons, right? Better to categorize under just big headers rather than giving random reasons. So that simplification will add further. The second good thing that they have done with partial withdrawal is, earlier the limit of, how many times you can withdraw for marriage and higher education was a combined 3 times. Now that has been changed 5 times for marriage and 10 times, and 10 times for higher education, right? So earlier the common 3-time limit was restrictive for people because, this is something that can be used for your family as well and not as an individual. Right. So if you want to, use EPFO balance for your children's marriage or your, wife's higher education, the earlier 3-time limit was very restrictive. But with this, people would actually be able to use their EPFO funds for the family's use case as well. So that has been a pretty good change that the government is trying to bring in. Apart from that, I think the overall thing that they have mentioned, right, that they would reduce the documentation further on partial withdrawal and make it even faster. Right, partial withdrawal is something that has traditionally also been super simple and super easy that has been happening. But with this new regulation, potentially it would happen much sooner. The limitations that they have removed around after how many months you can do, or the minimum service period that was different for different categories, right? Now all of that has been limited to just 12 months, right? So overall, a lot of confusion was removed from the entire process of partial withdrawal itself, which is, I would say, a very positive step that the government has done. Hopefully, they would reconsider the changes that have been made for full and final settlement. There are better ways to do, and I hope some of those changes would be rolled back.
Got it. So just summarizing, 3 things: reduced the number of categories from 13 to 3 in terms of withdrawals, added a miscellaneous category. Second is increased the number of withdrawals for education and marriage significantly so that you can actually support your family as well. And the third one is reduce the confusion on partial withdrawals, making a easy process even simpler, especially for partial withdrawals. Got it. I think that pretty much covers everything I had to talk today about. Tell me before we let you go, from your experience, what are the common mistakes that you see, and therefore what are some of the advice that you can give the viewers that they should look out for these mistakes, or like go back and check these 3 to 4 things in their EPFO that they should make sure is correct so that they don't have to face trouble later? Are there any such 3-4 things that you would recommend?
The biggest one is the pension contribution, because that is the hardest fix. So whether you are eligible for pension or you are not eligible for pension, please figure that out. If you have a confusion, talk to an expert, right? But ensure that if you are eligible, the rule is simple. If you are eligible for life. If you're not eligible, you're not eligible for life, right? So in your first employment, right, figure out whether you are eligible or not. I can give into more details of exact how to find that eligibility, but ensure that pension contributions by each of your employer, right? Every time you change jobs, they ask you to fill a form. And sometimes employees make that mistake of saying whether they were a pension member or they were not, right? And because of that mistake, employer keeps on filing wrong contributions and later it becomes a mess. This is something that could potentially lock your entire EPFO savings. So better is to be very, very sure of what your pension contributions are.
How do I check this? I also don't know. How do I check this?
So if you log in into your passbook, right, you will be able to see whether, in your distribution, whether your pension contribution is being done or not. If it is done, which means as per your current employer, you are getting pension distribution, right? Or some part of your contribution is being given to your pension fund. Now, whether you are eligible or not is something that you need to go back and check based on your first employment. If your first employment was before September 2014, right, you are eligible, irrespective of what your wages were, irrespective of what your salaries were. Right. If your first employment, as per this current EPFO account, right, or the UN in which you are checking, if it is after September 2014, then it depends on your EPF wage. If your EPF wage is above 15,000, you are not eligible. If it is 15,000 or below, then you are eligible. But all of it works out to your first employment in your current UN. So if your current UN has, first employment as eligible, then whether your salary becomes 1.5 CR doesn't matter. You are still eligible, you'll still get pension. If you are not eligible, then no matter, you get 5,000 rupees a month, you are still not eligible.
Okay, so that's one. Second, any other, you had said there are a few things that you were going to.
Second is also check for father's name mismatch, right? In India, what happens is Aadhaar and PAN of, a majority of us don't match, right? Because the way they have been created, and your Aadhaar cards don't have father's name as a mandatory field, right? It can be added in the address field, but it is not part of the Aadhaar mandatory fields, right? Yeah. And if you have a mismatch in father's name, what is present in your EPFO account, it should match with your documents, right? At least the PAN card, spelling by spelling, word by word. And if required, you update your Aadhaar card also to reflect the same. But ensure the father's name is second most common thing that makes a lot of rejections. There is also a very high contributor, which is bank accounts, because, you will only get the EPFO balance, withdrawal, whatever you do, to the bank account that is linked with the EPFO account, right? So if your bank account has changed, right, or if you decide to close that bank account, ensure that while you are working, your active bank account is linked with it. The reason is, until you do a withdrawal, whether if you close that bank account, it will still be there, right? There's no point of it. But the moment you want to do a withdrawal and you realize that bank account is gone, it becomes difficult to add on the right bank account and then do it. And a lot of these powers are with the employer. So instead of going and talking back to your ex-employer, better to do it when you are employed. Just get the bank account updated, or don't close the account which is linked to your PF account. As simple as that.
Sometimes what also happens is, like, for example, in my case, I can change my salary account very easily through a portal in my employee, but I don't think changing my salary account necessarily changes the account that was mentioned in the EPFO's records earlier. I don't think all employers will be actually changing that as well. And correct. So be careful.
It doesn't need to be a salary account. It has to be your bank account.
Yeah.
Right. A lot of problem happened, couple of years back when, the SBI mergers happened. All the sub SBI accounts got into. So IFSC codes changed for a lot of it, which means your current account that was linked with it, right? You have to remove it and then join it back again, right? So issues like that, where you didn't play a role, right?
Yeah.
But something happened with your bank account and your IFSC got updated or something happened, please go back and do it. Or if you decide to move away from a bank, get your new bank account associated with it, right? But ensure your correct bank account is linked with it while you are employed and do not need money, right? Because when you need money, you have to do all of this. It's just going to make your life very difficult.
Amazing. Thank you so much, Kunal. That was really, really insightful. I am definitely going to get an audit done for both me and my wife. And folks, for those of you who, if you found that helpful, show Kunal some love in the comments. After this episode, I feel a lot more comfortable that, okay, let my money be there. As long as the audit passes, everything is in place, we should be okay. And I think you made a really good point about asset allocation, given my debt portfolio is anyway low. Removing this, paying that home loan where I'm anyway making like a 1% arbitrage doesn't probably make sense. So that's for me, but take your own call and hope you found some value out of this. And thank you, Kunal, for joining us.
Absolutely. It was a pleasure being here. As I mentioned earlier, a lot of people need to know about this. There are lots of confusion, lots of misinformation, which makes a lot of people anxious. So I hope this would help a lot of people. And thank you. Thank you for your time.
Thank you. Thank you so much.